is Agriculture Today. We are joined now by Dan O'Brien. He is our K-State grain economist for our weekly grain market update. So before we get into things, Dan, thanks for joining us today.
Thank you, Samantha. Interesting days for sure. The markets are hopping around and it's sunny outside and all sorts of positives.
Well, you called it. You told us last week that when these markets or these reports dropped, that things were going to go a bit crazy. And for the most part, it's been a positive response. So good there.
Yes, and not necessarily any tremendous changes of 500 million bushels of corn or major surprises on wheat or soybeans, but generally saw positive news come out of these markets. You saw the March corn futures, the lead contract closed up 15 cents, May up 14, new crop D's up 6. So that we took the numbers in stride, and generally as things tightened up for corn, saw things positive. You even had a positive response for wheat of up 12 cents up to 8.35 for the March Kansas City contract close. And for soybeans, the March contract, again, which is the effective lead, there's a January contract, but the effective lead contract, for elevator's sake anyway, would be the March 23 up to $15.18.5, up 25 cents. So
wow.
At these lofty levels, it doesn't take much to have a 10, 15, 20 cent move, particularly on soybeans. And so I think overall that there's nothing in these reports that lend us that would lead us to think any more negatively about where markets might go. If anything, they give us some positive news in what had been developing. It's kind of a time of kind of an shucks, well, not much happening January, February. Well, now we're tightening up a little bit on the supply demand balance sheets, and things look a little bit more positive.
Yeah, things are ramping up for sure. Like you said, we had a bit of a lull there, but now as we get into the new year and actually get things started, it looks like, we're seeing some movement. So that's exciting for sure. So we covered a lot of futures there, but is there anything else future-wise you wanted to highlight before we move on to local cash prices?
I would say that when we look at the futures complex for corn, we really have no positive carry now in any of those contracts. If you go from March to May to July to September and D's, really probably no surprise that we'd see September, December approaching the 23 harvest go down. But from March to May to July, we're sideways to lower for all of them, and we did have more of a mixed picture. So you stand back and ask what signals that's giving us. You have players or traders in the market indicating that there's no motivation whatsoever to not try to sell whatever grain they can get hold of. And henceforth, most of our attention is on that very front contract. So, and almost the same situation for soybeans. Again, about from January to March, about a 5 cents per bushel per month drop, but then in essence sideways into May, July, August, September, again lower. So we have the South American crop coming on. Generally, you see the world supply demand numbers for soybean production, showing that the USDA did raise their estimate by 1 million metric tons of the size of the Brazilian crop, but dropped the Argentine soybean crop by 4 million metric tons. So the drought in Argentina is coming into play. I think you also saw that on the world corn numbers. The USDA dropped the Argentine corn estimate for this marketing year that we're in, harvest coming in several months, from 55 down to 52. And actually even dropped the Brazilian crop with southern Brazil getting caught up in some of that Argentine drought by 1 million metric tons. But what I've been watching in the news is our reports from in country of numbers below 50, closer to 45 and even lower. So wow. That if that comes about, then you got I guess it really bears watching for both for the world corn market and with carryover effects onto us with regard to how the world supply demand balance for corn could tighten up. By the way, was that earlier today, or excuse me, yesterday, at a corn school, Kansas Corn School, we brought up these international issues. So here's mainly a bunch of domestic agricultural producers worried about fertilizer prices and local basis, but what's happening in Argentina has their attention with the idea that it could give an unexpected boost going into spring and summer in their crops, and maybe give them some even better forward contracting opportunities. So interesting how this plays into Kansas farmers' decision-making processes.
Absolutely. Who would have thunk that conditions in Argentina would have led to, you know, some crazy price situations here in the US? Like you said, a local Kansas farmer, maybe not on his mind, but certainly now after that meeting, I'm sure it is.
Well, at least the ones that came, so
Yes.
came to the meeting. So,
And those listening now, hopefully, those are tuned in. So good to know for sure. And then, Dan, did we see anything in terms of local cash prices? Did we see any reaction there in terms of what today closed at?
I didn't see a lot of change in the basis levels for local cash prices. We have been on a trend here of late for corn anyway, to where we've seen some moderate weakening of basis in some areas. That the Colby basis had been running about $1 over futures. Now, at least the last time I looked at it yesterday, about 70, still only, also still very strong, but still 75 over. Salina 75 over. Garden City still very strong at $1.25, but that had been as high as 150, 160. So you've got this again 25, 30-cent weakening from the strength in the market. One or two really strong bids in southeast Kansas, around the Columbus, Cherokee County area the strongest of them being $1 over, a lot of others at 80 over or so. So I think, to me, it's kind of a puzzling quagmire in that we were very anxious about scrambling to get hold of supplies. Last fall, basis shot way up. So we've fulfilled those needs to some degree now. But I really do wonder about the last 3 to 4 months of this marketing year. That would be, be running from May, June, July, August, thereabouts. That'd be the last 4 months. Do we have enough corn to get to the end of this marketing year without having to see basis run up again out here in the West? So if I would guesstimate, if we have great growing conditions, a strong crop coming on out here for corn, for grain sorghum in the West, well, we'll still have strong basis levels, but probably not approaching what we had before. But if the dry conditions that we have, and again, our subsoils are very, very dry, if we don't have rains coming, I would sure wonder about a reigniting of strong basis levels for feed grains out here in the West, and just a real issue. And you add that in to again, the meeting that we had was in Oakley, out in western Kansas, and it was a corn meeting, but we were very aware of what's happening with the wheat crop. Very spotty, a lot of cases not looking very good. So a few areas not bad, but when we get the wheat harvest coming in, are wheat prices dropping enough to where we would consider feeding wheat or even running it through an ethanol plant? Although that's a challenge, I think, with the technologies. Still, will the wheat crop, whatever we get of it, will it bail out what could be a short feed grain crop for the summer months? I guess I'm unsure. I see the tightening of world wheat supply demand even further, U.S. and world wheat supply demand, and wonder whether we'll actually see, or whether we'll actually see any of that bailing out effect coming into play. World ending stocks for wheat, we're at 268.4 million metric tons. A little bit from December, but still down about 8 to 8.5% from the previous year, and we're still at record lows for world wheat supply demand. So world wheat supply demand balances. So I guess I'm an economist. They must pay me to worry, because I worry or I guess I'm cautious and pessimistic about the ability of the wheat market to suddenly turn around and bail out these other situations, particularly when, as you sit here in Kansas and see our dry subsoils and just wonder about the type of tremendous growing season we would need to have to really come through and start to rebuild ending stocks again and work our way out of these tight supply demand balance holes that we've found ourselves in.
Absolutely. Yeah. Using wheat for ethanol. I didn't even know that was an option here.
Well,
That's a bit surprising to hear.
We'll probably get 15 calls from ethanol plants, but it is a feed grain, and like I say, when you consider that, you've got how would you have to change the I guess bacteria that I was going to say bugs, but the bacteria in those plants to make that go, but yet. I think I remember in our extreme situations in the past that at least it was being considered. So we won't consider doing that at all unless we really come short out here in the West with feed grains again, with corn and sorghum. So who knows? But yet, if we get into that desperate situation, we'll do what we have to do.
Well, here's hoping we don't, because that's definitely interesting. I mean, good to know there's always the option there, but like you said, let's hope it doesn't come to that.
Let's hope it doesn't. They don't have to try it. So
absolutely. So Dan, in terms of rounding out today's program, was there anything you really wanted to touch on further, including, outlooks? We've hit on everything pretty much now: corn, wheat, soybeans. Was there anything else that was alarming to you in recent reports?
Just a little bit of the details on the corn supply demand balance sheet. The USDA did come in and lowered its estimate of production for last year, down 200 million bushels, and that was more of a harvested acre adjustment to the lower side. Yields actually were taken up 1 bushel per acre, but still down to 13.730 billion bushels. Feed residual, feed usage ratcheted back about 25 million. Ethanol production unchanged, but apparently wet corn milling down about 10 million bushels. Exports down 150 million. All total use overall down 185, and ending stocks down 15. So yeah, the 200 million bushel reduction in production of corn and usage estimates down to about 185. So with that, we ended up and took the projection of U.S. Corn stocks down to 1.242 billion bushels. It wasn't that long ago when we were at 1.5, 1.7, 1.8 billion, and thinking that there's almost no way we'd get down to 1.25 or 1.24 or something. Well, here we are, and it's dry, and we're still wondering where we're going to go. So that'd be one thing. And I just on the export number for soybeans is dropped by 55 million bushels. Stocks tightened up about 10. The export number for U.S. wheat was left unchanged, and ending stocks just a small adjustment. So wheat actually did not have a lot of changes in it, but corn, soybeans did. Grain sorghum, we don't have a balance sheet for that we're showing here, but they dropped the grain sorghum export number from 155 million down to 100 million, and dropped the size of the crop down too. So not great days for grain sorghum. The price was raised, so that's a great thing, but we're just limited on supplies, and anything we have, we're using it out here in the West to try to cover for the short corn crop as well.
Sure. I think I'm recalling correctly that some numbers that came across my email today. I think it was reported plantings for sorghum, and I think we were even down close to 3,000 acres than what we had planted the year before. So interesting trend there in terms of that.
But we'll see for sorghum, non-irrigated, drought-tolerant corn we'll have both of those crops have a lot of focus in coming months as we figure out, again, what do we put into very, very dry soils without a lot of subsoil moisture that have the best chance to give us some economic returns. Sorghum, drought tolerant corn, both are front and center in terms of how we might manage that situation.
Sure. Well, Dan, as always, I can't thank you enough for your time today and for this update. Insightful for sure, as always.
Thank you, Samantha. Take care.
You as well. Once again, that was K-State grain economist Dan O'Brien joining us for our weekly grain market update. We'll be back with more ahead on Agriculture Today.